Welcome to Drill Down Earnings. We have quarterly results out from Fabrinet. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We cover the 50 most interesting companies in technology. Fabrinet is certainly one. It's also one I'm conflicting on. I own the stock, so assume that what I say is biased. I'm not giving you investment advice. I wouldn't torture you like that, but I just want you to know that I do have a dog in this fight. What is Fabrinet? I said it's an important company. I really believe it is. It's a precision contract manufacturer. So contract manufacturers make stuff for other companies, like Foxconn makes iPhones for Apple, right? But Foxconn also makes cars and other things. Look, Fabrinet is really focused on complex optical, electronic, and electromechanical products for OEMs, particularly optical communications for automotive and industrial applications, and yes, AI data centers. So another stock I own is a company called Coherent. Again, this is not investment advice, but it's in a similar business. But they design and sell their own photonics and laser products. Fabrinet makes them for other people. So a capital efficient business if it's done well. They're focused on execution and scale if it's done well. I would argue it's doing well, but these are not the results maybe people like me were really hoping for. Let's talk about why. So this fiscal 2025 Q3, it was better than Wall Street estimated, but Wall Street just was, underestimating, I guess. When we look very specifically, so $871.8 million in revenues. That's a lot higher than it was last year, nearly 20% higher than it was a year ago, and very profitable, $81.3 million in profits, a little bit better than last year's profits. Actually, operating profit margins, we go on below the headline numbers, operating profit margins down to 9%, not as good, because they're shifting they've got a lot of startup costs as they go to more complex products. I'm going to talk about those products in a minute. Now, this wasn't always a datacom business. It was once really a big telecom business. But datacom is now 23% of revenues. In this quarter, telecom did really well. So maybe I own the stock because I think they're going into a lot of AI data centers and they're powering all the data centers, moving information around those data centers, and that is certainly happening. But in this particular quarter, telecom really saved their butt because there's some changes happening in the datacom business. Specifically, they said that their customers are starting to shift from 800 gig transport devices to 1.6 terabyte devices. And that switchover cost really hurt their margins in this quarter, and also maybe hurt some sales as well. So interestingly, automotive pulled away and telecom really broke away. Again, that big telecom business that's 37% of revenues in the quarter rose 42% on a year-over-year basis. But the datacom business slowed again this quarter, down 18%. So the growth rate had been falling. Now it's not even growing on a year-over-year basis, down 18%. But telecom turned it up 17%. We like to see anything growing at a company if I own the stock for sure. And we did see telecom kind of save them interestingly in this quarter. The non-optical business also did quite well. As I mentioned, $250 million in revenues, up 53% on a year-over-year basis. So let's dig in a little bit. I say 76%, I should say. So a big move there in that auto business. So importantly in this quarter, the company signed a multi-year deal with AWS with Amazon to provide these optical transport devices for Amazon Web Services. And Amazon took a stock ownership in the company as well, so there were some weird warrant expenses on the income sheet, on the income statement for this company. But they expect that ramp is going to really happen towards the end of this year and into next year, and that's when those products will happen. And they also are adding capacity in order to be able to supply those products. So I see that as a bullish sign going forward. But the margin pressure will continue into next quarter because the startup costs from those new products are also going to continue into next quarter. So when that news came out, the stock sold off, and after I was trading down 6%, but that's after a really good year. The S&P 500 is up 10% for the year, about. This stock's up 23% in the last year. And again, that datacom business has really come out of nowhere, and while it was down this quarter, it has still over the last 2 or 3 years really become a significant part of the Fabrinet business. And so when asked about what's really driving this and how do you balance telecom versus datacom, here's CEO Seamus Grady.
Overall, I would say, that the telecom business obviously remains very important for us, and we seem to have this pattern of if one part of our business is soft, because we've always said we have this counter-cyclicality. Previously when our telecom business was quite soft, our datacom business showed particular strength. And now with our datacom business, I wouldn't call it soft. I'd call it, we're waiting to really ramp a couple of programs that we've won. But our telecom business, it has been particularly strong. And we see that, we think it's set to continue.
All right, so there you have it from Seamus Grady, an impressive CEO in my book. But what's your drill on earnings takeaway? What's the one thing you want to remember about this company? So, Fabrinet reporting Q3 2025 earnings. Your essential summary tells this company they had $871.8 million in revenues, nearly 20% growth on a year-over-year basis. But the one number that tells you a whole lot is the negative 18% year-over-year comparison of what was happening in their datacom business. Datacom growth just not there as customers are switching over to faster products later in the year, but not in this quarter. Maybe a little disappointment there from a stock that I own. I'm biased, but Fabrinet Datacom growth not there. Telecom saved their butt this quarter, and they're good, lucky to have both businesses. Gave them some overall growth for Fabrinet. All right, thanks for checking out Drill on Earnings. I'm Cory Johnson.